with the drop in KC futures, we actually are competing on rail into Mexico with Russia now. I know some people, I haven't done it yet, that have increased their hardwood exports.
It's cause for celebration, right? The Strait of Hormuz is reopening to vessel traffic. Chinese exports are starting to return. Prices are back to January 2025 levels, but the problem is these grain prices are terrible.
Welcome to the Wheats on Your Mind podcast. That was Mike O'Day and Josh Linville with StoneX. My name is Aaron Harries. Wheats on Your Mind is brought to you by the Kansas Wheat Commission and Kansas Association of Wheat Growers. On this episode, we have our friends from StoneX, Mike O'Day and Josh Linville, joining us. We visited with them a few weeks ago, and we're going to have a roundtable discussion here about how harvest is going and how the markets are looking. Got CEO of Kansas Wheat, Justin Gilpin, here by my side, and we'll just jump into it. Justin, let's start off talking about, here we are mid-June. It's been an unusual harvest that started in May, but it sure hasn't moved very quickly to this point.
Right, and to be able to talk to these guys about is where we're at with harvest, and what a weird year, right? A weird growing season, and then one of the earliest starts to harvest because the crop is so advanced and mature, and with test cutting happening before Memorial Day, then a harvest pause due to rains and high humidity, and as we sit here today, June 17th, getting that open window where we've got combines kind of going all across the state now, and test cutting even starting up in northwest Kansas. But it's going to happen pretty quick just because of the lower bushels and less acres this year. But going to be interested to hear what Mike's thinking as far as yields and quality and how this crop's going to shape up and compare across the region.
Yeah, go ahead, Mike. What are you hearing from your eyes and ears on the ground out there?
Yeah, we're getting cranked up out there, like you said. So it has been an unusual harvest. Crop's very much ahead of maturity. So, we're pretty well cut out, I would say, Wichita South, over toward, say, Pratt in that area. We're getting 75% done. It's been an interesting quality year so far. A lot of low pro back central in southern Kansas. You get in that Hutch area, a lot of 9s and 10s, some 8s. But as we move further west, it's getting a lot better. You get around the that right area that's probably an 1150. Scott said he's been cutting some really nice wheat. The weekend run, they averaged 62 pounds and 12.8 pro. Garden City's probably 12-ish. Scott Sablett's 12-ish. I talked to guys at Cornerstone yesterday for a while, and they're just getting started, but proteins all over the place, but I do think we'll probably wind up averaging, close to 1150 when we're all said and done for Kansas. Yields all over the place. You guys know the story. Any continuous crops, 10, 15 bushel. Good summer follows run anywhere from, 30 to 40 to 50. And irrigated still in the 60s and 70s. My big thing right now is with the July crop report, the USDA lowered yield a touch, which is not unexpected, but now we'll get the acres report at the end of the June report, So I would look for lower harvested acres. Now I've got my crop down around 490 or 495. I think that's kind of immaterial right now until we get further into it. But, we've seen a nice little bounce in futures here. We ran down. We didn't quite fill the gap that was left in the July, around 609. I just think you've got more China talk on corn and beans, maybe some wheat. There's definitely an issue growing in soft wheat with too much rain. I think we're going to start to see basis start to firm up a little bit on soft wheat. I do think we're going to see hard wheat basis probably firm up a little bit too. Now, the biggest thing to look at on wheat is look at the East wheat spread. In Kansas City, it's sitting at 15.5, and corn spreads are wider. So when I look at my elevator business, what are we going to do? Are we going to carry wheat or are we going to carry corn? So we're going to have to build some cash carries into this market. So if you're looking at these elevator bids, they're probably too high just from looking at where spreads are at and how we're going to try to build some cash carry into this thing. Drifted there for you on you, but I'll let Justin go from there.
Where we're sitting today, the other move spread that we're seeing, and you touched on it, is that Kansas City, Chicago, and whether that's seeing some selling in Kansas City and kind of people unwinding a little bit of that spread maybe, but then the quality play as well. It's almost like, you mentioned USDA had the hard red winter wheat production at, I think, 497, and you're kind of right around that number too. I mean, below 500. Do you remember the last time U.S. hard red winter wheat production was sub 500?
Oh, not off the top of my head, but wasn't it 22?
In 23, when we had the last time Kansas had that right at 200 million bushel production, Kansas was, the epicenter of the drought. And what's, I think, has been different about 23 and 26 when we look at them comparatively is just maybe Nebraska would be ground zero for that drought, western Nebraska, but that drought is just so much wider spread and impacting Texas, Oklahoma, Colorado, up Nebraska, and parts of South Dakota. The overall hard red winter wheat production is going to be impacted more in 26 than we saw in 23, even though Kansas is a little bit different.
Yeah, in 22-23, we were at 531 final number.
Right, just above it.
Yeah, so this may be, I go back to 07 on this stuff. That's the year I look at the most.
That's when you got out of college, right? 07? That's when you started.
07, production was 956 million bushels. So
wow.
So think about that. But we also had exports at 536 million bushels versus, I've got my exports this year like 190, 200. I do think that one thing that's happened since the last time we talked, we saw this KC Paris Chicago spread narrow up dramatically. So that thing walked right back out. So we were pushing U.S. wheat out of the export market. With the drop in KC futures, we actually are competing on rail into Mexico with Russia now. So I know some people, I haven't done it yet, that have increased their hard wheat exports just because of that spread walking in a little bit. It'll be interesting today when we see this Algerian business gets done, how that price is up versus some of the Black State stuff, because the markets over there has gone flat. Russian wheat's 230, 240, just hasn't moved in the last 60 days. French wheat's about the same values. Bob values are kind of firm. Not firm, but they haven't dropped. I think that's the better way to look at it.
We just finished up an interesting discussion. We had a group from Nigeria that was just flew out last night. You know, we started planning this trip back in May. And so in thinking about the discussions we were going to have at that time where hard red winter wheat was priced and what was happening with the crop. And here we were 4 weeks later, then having discussions with that group about how U.S. wheat is going to be competitive and what the quality is going to look like versus what we were thinking 4 weeks ago when we were thinking about what we were going to be talking about and how it's going to be a challenging year.
Yeah, there was a Russian sale, or there was a U.S. sale to Nigeria in the export sales report yesterday.
It's been amazing how that's changed, and it's almost like the market's kind of digested the disaster of the hard red winter wheat crop and looking at where we're at globally, what's happening with the corn and soybean crop, and we're going to transition over here to Josh about all the global dynamics that are going on that are impacting price. It'll be interesting to see I'll be watching to see what you do with your export number, Mike.
One other quick note. So we've got this heat wave coming in Europe, right? Now, I don't think it's going to impact the wheat that much. I mean, it could still take the top off the crop, specifically in Western Europe, France, Germany, Poland, the Baltics. The Balkans still look pretty good. Big crop coming in Romania, probably record crop in Romania. Hungary looks good. Pretty good sized crop coming in Ukraine, but it just keeps raining in southern Russia. Now, what's the one thing we know about the wheat market? You go to what's available. So if it's a lower quality crop, people figure out how to use it. But that could be a story second half of the year. If you've got a problem in southern Russian wheat quality, they've got smaller spring wheat acres. It's still going to be a big crop, 85, 88 million metric ton probably or more. But what's the milling versus feed wheat spread on that? And how's that going to play out later versus U.S. premiums? The other thing that people need to start thinking about is this new Minneapolis contract coming online with the September. The July is a dead contract because they're changing contract specs for September. It's got some big implications for the milling industry and for the farmer basis, because the way they changed the delivery process, it's actually bearish futures, Minneapolis futures. It's bullish basis and it's bearish spreads. So like you look at SEP right now, you got Minneapolis SEP trading at a discount to Kansas City. Now, historically, that spread was always 40, 50 premium mini versus KC. Do we go now to a structure where mini is 30, 40 under KC? One thing I did do in my hard wheat balance sheets is I kicked my spring wheat inclusions up about 15, 20 million bushels, took 15 million out of hard wheat and added a little bit, a couple other places. But you can only move so much around just from a logistics and grind perspective. But all of a sudden, people that look at those for hard wheat basis values can start to pay a little more attention to that spread. Because like I said, it's actually bullish spring wheat basis. That'll come into play as we look at that spread too.
No, I think it'd be a good time for us also to kind of plug the Wheat Quality Council's doing their spring wheat tour the last week in July, and I think they're taking registrations now. And what's going on with harvest with hard red winter, I think there'll be a lot of attention with the spring wheat crop. And so if you've got people that are interested in getting on that tour this year, I think that the registration's on the Wheat Quality Council website. And with all the rain that Canada's been getting, that spring wheat crop will be getting a lot of attention, especially on that feed versus milling quality discussion you're talking about. The last thing I'd say, Mike, is talking about the Minneapolis contract changes that are being implemented. There are a few people that feel like the recent amendments to the Kansas City contract have also had some slight influences on the relationship with Kansas City, Chicago, and potentially Minneapolis too.
Yeah, because storage rates goes up versus the March contract. So I did increase my spring wheat acres number a little bit, a little later planting. So then I'll let you guys talk about fertilizer.
Thanks, Mike. We can do that. Josh, I guess since the last time we talked in December, urea is up about 80%. Where do things stand today?
Well, from their high that was set probably a couple months ago, NOLA urea, New Orleans, Louisiana, urea bar just hit 780. Actually, I think the actual number was 782. As of this morning, I've had to update my stuff because it's changing so quickly. $350 a ton.
Wow.
That's actually the first time we have seen the price that low since January 2025.
Wow.
So from that perspective, it's cause for celebration, right? The Strait of Hormuz is reopening to vessel traffic. Chinese exports are starting to return. Prices are back to January 2025 levels. But the problem is these grain prices are terrible. So as much as it's come off, when you look at the comparison, you look at that relationship between them, it's still a high number versus what we'd consider normal for historic values. But I got to stop there. I've shared so much bad news this year so far. I just have to go with the win, go with the positive story, and shut up. Let it be.
Well, hey, Josh, I just want to make sure that I give you a big shout out and thank you. I know you've unintentionally become pretty famous here the last 2 months, and everybody directing their fertilizer questions and shipping questions, and do appreciate the information that you're so willing to visit with different programs and come on with us, and that information is appreciated by farmers. I think I caught one of your podcasts where you were talking about, you mentioned the term or asked the question, have we seen nitrogen demand destruction? And has that, not in large scale, but if it's incremental globally, can you talk about your thoughts around that?
I think the short answer is yes. And I think it's been somewhat proven by the fact that when you look around the world with all the supply problems we've had, I have not heard one single place around the world who has stepped up and said, I cannot get what I want or I cannot get what I need. And I think the only way you make that work is if there is demand destruction. And yeah, like you said, I don't think it's major, 3 to 5% at most, because anything more and you start talking about massive yield cutbacks, yield potential cutbacks. But when you think about what a 3 to 5% cutback is globally on the nitrogen sector, that is a huge amount of tons. And we always forget that. I know people around me get sick and tired of me saying it all the time. But a very small percentage of an extremely large number is still a really big number that can sway the market. And I think that's what we've seen. And I think that's why you actually saw the urea market prices falling off pretty hard from their highs, even before the Strait of Hormuz started to get talked about reopening. I think that demand destruction, I think the farmers around the world said, no more. You know, if our average application rate is 250 pounds per quart acre, for example, sorry, I always go back to that. That's what we do for our operation. But 250 pounds, when you cut back 10, 15 pounds, that's not really that big of an impact on the yield potential, but that gets you your 5%.
Any advice right now to farmers who are thinking about, wrapping up harvest and thinking about planting in the fall? What's the move on nitrogen?
I would say your first one, and again, everybody's going to want to stick their head in the sand, not talk about it because the price is still high. We're still suffering as a farm community. Finances just are still in pretty rough shape. You cannot stop talking. You cannot cut off that line of communication and just hope that something's better in the future. I'm still pushing the eyes. I think you need to be having more conversations, not less. Constantly update. Hey, where's the fertilizer price? Hey, where's the grain price? Hey, how does this look? What do you think? What's your expectation? What are you hearing in the marketplace? The more information you have, the better informed you are, the better decision making you have. The other part of it is, and this is something I'm going to diverge from because the first part's a normal conversation point I always make. The second, you don't sell all your grain at the same time. Why are you buying your fertilizer at the same time? I will tell you right now, the best way I can describe the fertilizer markets is confusion. Nobody knows what's going on. You talked to the market today about that 350 number that traded. Do you think it's going higher? Or do you think it's going lower? I'm just not sure. I can justify the lower. I can justify that. Nobody knows. None of us, no individual person is smarter than the marketplace. We just aren't. So I think, unfortunately, in order to be successful this year, I think to a certain extent, number one, we got to look for those opportunities, those chances to lock in profits, but we also have to sit there and be willing to start doing stuff more in layers. Yeah, it's a little more work, it's a few more contracts and things like that, but spread that risk out.
Yeah, Josh, I think that's really good advice. And, you have to deal with so many things. You are watching your charts and numbers and supply and demand and what's going on with tenders and pricing. But there's, as we sit here today, the other headlines that you're having to watch is, obviously, is there a peace deal going to be signed on Friday? Is the Strait open or is it not open? What's happening with USMCA and what implications are going to happen with that this week with those discussions? From a big picture standpoint, you're getting involved in these bigger discussions that our ag groups and farmers and farmer leaders are having a chance to provide input on. And one thing that's really come to light probably the last 60 to 90 days is we've always had food security and the role food security plays to our national security and our role as an ag exporter. That's something, the U.S. ag industry is always taking a lot of pride in. But I do think that what's become more evident and transparent to a lot of people who didn't necessarily know it is that our food security that we do have in surplus and are an exporter is very reliant on importing of crop inputs. And so this discussion about infrastructure and what do we need to do to try to address being more self-sufficient on crop inputs, we have an opportunity to provide input to leadership in the administration who sees this as a priority now. We need to make sure we're communicating the right things and right inputs if we're going to do major investments or long-term pictures. What are some of your thoughts on that for as an industry from a farmer perspective?
Yeah, so far I've been pretty disappointed in a lot of the things I've heard out of DC. And I start to get angry, I start to get upset, and I start to type stuff on that stupid Twitter website that I shouldn't probably put out that my compliance might come talk to me about. But I always stop myself, and I always have to remember that prior to 16 weeks ago, if you'd gone to D.C. and polled any politician and said, what can you tell me about fertilizer? They would have looked you dead in the eye and said, what are you even talking about? I don't know what this market is that you're talking. D.C. doesn't understand a lot of what the farmer does. They understand, it's important from a voting block. They don't really know the ins and outs of what the average farmer really deals with on a day-to-day basis. And so I try to give a little bit of grace and know that they're trying to learn this as quickly as possible. I wish they'd spend more time talking to farmers. I wish they'd spend more time to actually talking to retailers. I think they'd get a significantly better view of the market talking to a lot of the retailers because they're touching so many points of it, right? They're talking to the farmers, the manufacturers, the distributors, the rail lines, the truckers. They're talking to the entire system. That's a great place to learn from. They're doing the best they can. And it's not just fertilizers, it's not just farmers, right? They've got stuff around going on. But yeah, I think it comes down to we need to start looking ahead, not in a next election cycle. We need to start looking 5-10 years down the road. You don't plant a tree with the expectation that you're going to enjoy the shade. You plant trees for the next generation. We need to start considering building more nitrogen production here for that next generation. Move that reliance on the rest of the world. Stop getting our urea from the Middle East. Stop getting it from Russia. We've got the ability. We've got the gas supplies. We've got everything here that we need to cut that import chain. We can do the same thing for UAN and anhydrous. But it's going to take kind of a kickstart because, again, it's a very expensive proposition. It's not exactly an exciting one that outside parties really want to get into. We need more competition in the space. So that's what I keep hoping we're going to see from DC is, hey, we're going to start boosting nitrogen production, and we're going to help a new company do it. We're going to help increase the production, help the S&D, help competition. Unfortunately, on the phosphate side, I know people will yell about that, and you have every right to. That price is grotesquely high. But unfortunately, guys, there's a finite amount of phosphate rock in the North American marketplace. And until they come out and they can find a brand new phosphate rock reserve that's going to last 100 years, what we have is what we have. From that perspective, I think we need to do a better job of working with some of our allies, like in Morocco, like in Norway, who have found a massive phosphate rock reserve, like Saudi Arabia, and get long-term supplies so we know that we have these tons in place. We know they're going to come to us. And potash, you talk about the North America Trade Agreement. As long as we can keep that in place, we're fine on potash. We don't produce much of our own to meet our own demand, but 90% of our imports come from Canada. As long as we can stay on good footing with those guys, we're good. So if our strategy for potash is just stay in good relationship with Canada, we should be fine.
Yeah, and with the renegotiation of USMCA, who knows? Who knows? I think it's interesting you bring up the disconnect between politicians and farmers. Justin, that trade team we had this week from Nigeria, the gentlemen from Olam Milling are actually born in India, and they were relating stories about how the Indian government interfering with fertilizer and farmers. So it's the same story everywhere, maybe just on a separate scale. Gentlemen, this is a great discussion as we wrap this up. Mike, any final comments for you? Final predictions on the crop as we wrap up harvest here in the next few weeks?
Oh, I just think we're going to, futures are kind of stuck in a trading range here. I don't think we're going to break a lot. I don't see a whole lot of upside without some kind of problem and for the next 30 to 60 days. But I do think the lows are in, but the problem is you're just going to work down the curve as we, get the July expiry. That's probably where the SEP's going to try to go. But I do think the short-term lows are in. I got two things on my radar. I'm watching this soft wheat situation pretty close. If we continue to get these range, we're going to run into quality problems. If you want to look at a tight balance sheet from a price perspective and a carryout to use perspective, it's soft wheat. You could get that thing under 90 million bushels this year. So that could be a little friendly over the longer term. Then we just have to see how this EU crop does evolve with this heat coming in late.
Oh, no, Mike, I appreciate those perspectives. And I think that tees it up for, we look forward to catching up with you next month after we get the planted acreage and stock report behind us and start looking forward to the August report. It'd be great to catch up with you next month as we all know a little bit more in the future, right?
Yep. Sounds good.
Mike O'Day, Josh Linville with StoneX. Gentlemen, thanks for your time again. A lot of great information. We'll talk to you down the road.
Always good to visit with you guys. Thanks for taking the time.
Thanks, guys.
Bye.
That was Mike O'Day and Josh Linville with StoneX. Wheats on Your Mind is brought to you by the Kansas Wheat Commission and Kansas Association of Wheat Growers. If you're enjoying this podcast, please share it with your friends and subscribe. Thank you for listening. You can find previous episodes on wheatsonyourmind.com.